In this video we are analysing ExxonMobil ticker XOM. So to get straight into it, what are going to be key support levels, because we are currently pulling back. We were down 5% on Friday, and this would have our closest support at $82, so not too far off from where we are now. We can see as well that was the original pullback level from the recent high, or the 52-week high that we created. So as of right now, this would be the key support we would be paying attention to, because it is also our second deviation on the 6-month chart. If we break that though, then we do have a very strong resistance at around $74.50, because not only is that our third deviation on the 6-month, it is also our second deviation on the 1-year chart. So definitely a heavy layer of support, definitely a potential area to get some long plays on it, even if it's just a small bounce that we get, because we could definitely see a bounce going to around $80. Now if we break that and continue down though, we are then looking at $67, going lower to $61.50, and a final level at $50. So these would be the key supports. On the other hand, if you're more bullish on this, you're expecting a bounce to the upside, what are going to be key resistance levels? And as of right now, we have two resistances at $87.50 and $90, which is our first deviation on both the 6-month and the 1-year chart. But also very close to that, you can see, is the gap fill location at around $19.50. So really the key area to be focusing on is if we break back above this $87.50, you want to see it as a support, and then we could see a push all the way to $90 and $19.50, and those would be the key resistances. If we break that, then we could see quite a sharp move to the upside, which would be $97 and $100. But again, oil is selling off from where we are now. I mean, crude oil futures are getting weaker. So the likelihood of getting back to those levels, probably not all that much, because we'll probably see things like ExxonMobil's profits go down in the next quarter. And obviously stocks are all affected by their future earnings, not the ones that they've just had. So if we do continue though further, we would be looking at 105, which take us to that 52-week low. And if you get above that, really, then it is an easy short play, because you expect at least a sharp pullback on oil. You tend to see these stocks be very volatile, because things like oil, crude oil, just move so volatile. So if they push their highs, you tend to see some sort of a pullback. They don't just do a steady increase. So that would be quite a probably easy short bias play. If we break that though, we'd be looking at 120 and 125, but again, really likelihood of those levels, not all that much. So one thing to note is, just quickly, we will go over to the crude oil futures just to make things a bit more clear, because this is the easier way to trade oil-based stocks. Look where the deviations are on the oil futures, and then if you're buying the stocks off the futures, sometimes these stocks lag a bit, so you can get in at a better price. So we can see we are coming into our second deviation of both the 6-month and the 1-year chart on the crude oil futures. So it's $77.50. That is our key support. So we could start seeing a bounce on crude oil. And where would we see this bounce going? Probably to around $87. But if we break that and continue down, then we would have further support at $67 and $64. But again, we would at least expect a bounce before continuing down that low. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe, and check out this analysis video here.